Suresh. So let's, before we get into 2013, we've still got a month and a bit left of the year. What are your thoughts right now as to the development broadly in a high-level view of the banking sector in Africa this year?
Sam. I think it's been quite a stable development of the banking sector this year. I don't think we've seen that exogenous shocks that we've seen in the prior 2 years. Particularly the high growth areas has been, again, the petroleum exporters. So we've seen good growth of the banking sector in Nigeria. We've seen good growth of the banking sectors in Angola. We're seeing an emerging banking sector now doing quite well in Ghana. We're also seeing some stability in terms of the performance of the banks in Kenya. We're seeing now good growth in terms of nascent markets like South Sudan. We're seeing a bit of changes in terms of capitalization in Zambia. So I think all of this is starting to play for a very good 2013 in terms of growth in banks. I think one of the key things we are also seeing is the growth in the retail sector for a lot of these emerging countries as such.
You know, it is interesting when you're talking about, all these banks, because many of the regions we look at, there are a lot of smaller banks. And, for example, Kenya, not many of the banks are in fact listed. Of course, the big ones are, but there are many banks operating in that space. What are your thoughts on consolidation in the banking sector going into 2013? Because, of course, there was some M&A activity in Nigeria, but in Ghana and, spread out across the region, but not so pronounced so far.
No, absolutely, Sam. I think let's start with Kenya first. Kenya consolidation, the banking sector has been on the cards for a number of years now. We're talking about 48 odd banks in Kenya, and I think it's time for consolidation in the industry.
But why is it not happening yet?
I think there's been two things at play. One is the regulator has been looking at more of a sort of expansionary policy, bearing in mind that they felt that Kenyan market was still underbanked. So as a result, there was quite a bit of space for more banks, whilst other countries felt that there was time for consolidation. If you look at Nigeria, post 2005, from 99, now we're down to 20 banks.
And of course, really, we're forced into consolidation.
Correct. I think there are two ways. One, you can either increase the amount of capital, or you can actually ask banks to start talking to each other to get a more stronger banking system. But I think particularly if you have to look at most of the other markets besides Kenya, I think you still have a very much expansionary central bank who wants to invite more banks to come through, invite more competition, and also try to get to those retail or rural sectors, which is largely still underbanked.
So do you think it's the indigenous banks that are doing the best at getting into to the retail unbanked population?
Sam, I think it's been a combination of both. If you just look at Tanzania, for example, there's been a big push by both foreign and indigenous banks in looking at the retail space. We're seeing the same in Angola as well. We're seeing the same in Nigeria. So I don't really think that, I think the indigenous banks have taken the lead primarily because of their distribution. They have the largest footprint in the country. But I think there are four pillars really for the retail space. And I think we're going to need to watch this very, very carefully. One is infrastructure. Two is technology and innovation. Three is the lack of credit bureaus. We're starting to see credit bureaus starting up in different countries, and you'll find, I think that there'll be a close correlation between lower non-performing loans and credit bureaus. So we need that particular infrastructure in retail. My sense is that with big banks' foray in a number of countries into retail, probably see a little bit of uptick in terms of non-performing loans over the next year and the following year as such.
Because they're a little bit more aggressive and they have the capacity to be that in those spaces?
Exactly, Sam. We haven't seen that much of major corporate expansion activity in Africa. I mean, certain countries where there's large infrastructure growth we have, but with banks having larger surpluses of liquidity, they have to find other ways in which to deploy that liquidity. Retail has certainly been one of them. But we haven't yet been able to track exact payment behavior in some of the more nascent markets. As a result, I expect that there'll be a higher NPL, and we've seen this trend now for the last few years.
What about the corporate and investment banking side of things? Because of course there's so much activity going on in the continent, and then a need for banking services on that end. Of course, RMB cases into that space, and you've been opening up bureaus in Nigeria and Kenya. Are we seeing the development of that side of banking?
Sam, this is an exciting part of the banking space, which I'm really excited about. RMB has just been granted a license in Nigeria, so we'll be starting corporate and investment banking up there by January or February. But I think if you just look at the oil-producing countries, large infrastructure growth, huge opportunities for one, providing debt, but also providing a lot of structuring activities. So the countries where I do see increased corporate investment activities is Nigeria, Ghana, Angola, and possibly Zambia. I mean, Zambia, with their recent bond, which has been oversubscribed, I think has been a testament to the investor appetite into Africa as such. But I think certainly Ghana, Angola, and Nigeria are the countries to watch in terms of the most activity within the banking sector.
And still, I mean, when you talk about Angola, I mean, there's still just no stock exchange there. So it's very hard to almost get exposure to Angola's growth story, whereas Nigeria, Kenya, different story.
And I think this is where the problem is. We still working with a post-war era within Angola. But I think, having said so, I think the central bank and the regulators have been starting to work very, very closely in developing the capital markets there. The first comes with a bond issue. The second part then follows in terms of local banks opening up their balance sheets in terms of the capital markets. But I think we still have 2 or 3 years to go within Angola.
Yep.